Hello, everyone. Welcome to Venture Matters TV. The series is brought to you by KrAsia, which is a media brand under 36Kr Global, covering innovation news in Asia in Chinese, English, and Japanese language. Through this series, we invite top investors that are active in the field to share their opinion on market trends. Today's guest, Jeffrey Paine, is a co-founder and managing partner of Golden Gate Ventures, an early-stage technology venture capital fund based in Singapore. The fund is invested in Southeast Asia, has over $175 million under management, and has backed more than 45 companies since 2012. Jeffrey started and manages the Singapore chapter of the Founder Institute, where he is currently overseeing the expansion in Southeast Asia and Japan. Since 2010, the Founder Institute in Singapore has graduated over 100 companies. He is a recipient of the Global Founder Institute Director Award 2012 for Greatest Ecosystem Impact. Jeffrey is a Singapore native and graduated with a Bachelor of Business Administration from the University of Southern California in Los Angeles. With that, I'd like to welcome Jeffrey Paine. Hi, Jeff.
Hello, how are you? Good morning, good evening, good night.
It's a pleasure to have you on the show. How are you doing these days?
I'm good. I think we have two offices, one in Singapore and one in Jakarta. So I think the team in Jakarta is kind of going through some more lockdowns. Singapore is okay, as you know. But doing business have changed since February, so we are adapting to it, and we are also coming into office a bit more now. So yeah, look forward to phase 3 in Singapore.
But you guys must be busy now. I guess you're smelling opportunity in this kind of environment.
Yeah, I think the lay of the land since February was it first came as a shock. Then I think most VCs took about 2 months to kind of recalibrate internally. So making sure the portfolios are fine, making sure they have enough runway, making sure LPs are okay, so the commitments are fine. And then I think it was around May, June is, when most of us started to look around for new things. And of course, new things tends to be, current portfolios that are looking for bridge rounds, extension rounds, and that kind of thing. And then July onwards, you see a lot more new companies, new deals, like new companies that VCs have never actually met in person, started raising money. So that was in July. I think it has been strong since July. So yeah, so far so good.
Okay, great. Coming back more to the business later on.
Yeah.
I wanted to dial back to the title. So we titled it "Bringing Silicon Valley Ideas to Southeast Asia." Kind of a motto for yourself as well, and that's we found makes a good title for our episode today. Mm-hmm. Can we start? Can you explain a bit what brought you to Silicon Valley in the first place?
What brought me? So I'm born and raised here. I went to school at USC in LA, and then I think at that time, it was just when Netscape went public. So I was in school from 95 to 99, and then it was at that time when I went from pager to Nokia, to BlackBerry. Yeah. And then it was that time I went from Alta Vista to Google. So when I graduated, I did IT consulting at KPMG in LA office, and have projects in Mountain View, in Sacramento, and different parts of the US. So that's kind of brought me a little bit more into the world of Silicon Valley startups, big tech, and then a lot of my coworkers actually left for startups in LA, like carsdirect.com, buy.com, those guys, the .com era, right? So yeah, so that was when I was kind of there, but I didn't really move to a startup, but I was consulting for some of them. Yeah, so that
Okay.
was my story.
Yeah. But the idea to found a VC, did it come in back in US or?
No. So when I kind of left the US, I came back to Singapore. I joined a public listed company here who wanted to start a corporate venture fund. So I had a little bit of window on how that looks like, but I did everything from scratch. So I think nobody knew how to do that, in 2000, 2001 in Singapore. Most of my mentors back then were private equity guys. And then the government came in. So I think they used to be called NSTB. They set up a 1 billion fund of funds, and then the first few groups of VCs raised money back then, and some of them you guys should know. There is a group of Singaporean VCs started out in Singapore. They moved to China, and they are now very, very famous in China. So that was the result of the government push. Is somewhat similar to what the NRF is doing in Singapore in 2007. So I ended up doing corporate development, M&A, and running a corporate venture fund for a public listed company, investing in Asia and the US. So that was like steep learning curve, learn everything from scratch. And then if your question is about starting Golden Gate Ventures, I think that came later. So I returned. So between 2003 and 2009, I was away. I was in China. I was in Dubai, and then I came back in 2009 to start a Founder Institute Singapore chapter. So that brought me to the new, I guess, second generation of VC angels and startups. Got me back into the Silicon Valley game, I think, 2009, and made a lot of network there, and then brought a lot of founders to Singapore to mentor, and then help them launch, in Southeast Asia. So at that time, I met Vinny, my co-founder now, who was backpacking in Asia in 2010, and met him for coffee. I said, hey, why don't you mentor at some of the FI chapters in Jakarta and Hanoi? So he went to do that. And after about a year, we were talking, and we was like, okay, there are a lot of teams that are good, but they lack the capital in their home countries. And then nobody in Silicon Valley wants to invest in Southeast Asia because they don't understand. But when we pitched, if you invest in a fund to invest in Southeast Asia, would you invest? Then most of them say yes. So I think direct investment is something they don't understand back then. I think that was 2010, 2011. But investing in a fund to do that they understand. So that was how Golden Gate was born. That was how Fund One, our first fund, was born. It was mostly individuals.
And you couldn't possibly have predicted the explosion in investment in this region at that time, or what was your perspective?
I think it's a 80-20 thing. So like 80% I know it's going to come because I've seen this happen in China. I was in and out of China as well. I think 2005, 2006. So I've seen this happen in China. I've seen this happen in India. The first wave of VCs in India, that was in 2006, I believe. So I knew it's going to come to Southeast Asia, but as you know, Southeast Asia is not one country, right? It's 10 countries. So the fact is, it's likely gonna start. So the 80% is like I knew it's gonna come to Southeast Asia, but then the 20% is it's probably gonna start with Indonesia first, right? But I think over the years it has kind of changed a little bit. But I think Indonesia still drives the most of the growth, most of the money, etc. Yeah, but you can kind of tell, but it's just that we don't know.
Any initial success stories you want to share? What What did you invest in initially?
For us, I think like most investors back then, I think we were the number. We were, if I'm not wrong, we were probably the. I'm not sure. Like regional funds, we are probably the third one. I believe. I'm not sure. Somebody may correct me on that. I think East Venture started first for Indonesia's 500 startups started second, and then we were the third one. I think back then our fund one, we also have 500 startups as a LP. But I believe there was an earlier batch in 2009 from the NRF, the TIS scheme, but they obviously they only invest in Singapore incorporated companies. So that there was a new kind of a group of people there. I think most of us, I can say at that time, we are also learning. Everyone's learning. So actually, most of us don't really know what we're doing. So we invested in RedMart, Carousell, Money Smart, right? Trade Gecko, which was just acquired recently. So the earlier batches, a lot of us, do have invested in many similar companies, because at that time it was hard to raise bigger rounds, right? So you need to gang up. A lot of people have to gang up on those rounds. Yeah, so a lot of us share cap tables everywhere. Yeah, so I think Fund One, we have a few interesting hits. I think that obviously most people's Fund One in Southeast Asia will do quite well. I think the 2012 to 2014 batch they should do quite well. Yeah.
Talking about the ecosystem, do you think companies nowadays are looking more into China rather than Silicon Valley?
Companies in Southeast Asia?
Yeah.
Yeah. Yes. So I think I don't know when it switched. I believe it's probably 2016, 2017. In the past, most people copy. I mean, to be fair, most startups that are big in our region are copies, right? Copycats. So most of them, they do copy the West first, and then try to localize. And then sometimes they get it right. Sometimes they are a little bit early. Sometimes B2C doesn't work. They'll switch to B2B and make sure they make money and survive before they switch back. I think in that period, I think 2016, 2017, a lot more boom, a lot more things happening in India. Indian companies are also taking cues from China. China is in their own world, but most of Chinese companies are also copies. So if you really understand where things come from, it usually comes from the West, and it's copied in China, copied in India, and then copied all the way to to South America and Southeast Asia. So as of today, yes, most founders are looking at ideas everywhere, right? From India to China to the US to some pockets, especially I think SaaS companies or some pockets, and gaming companies that pockets in Europe. But the world is getting smaller. The data and the information, just like what you guys are doing, the information are readily available. They can research companies fairly quickly. Most notable companies, you can find information in English. You can kind of like understand what's happening. Yeah. So everything is getting more smaller and smaller.
What is the ecosystem still missing nowadays in Southeast Asia? Can they still learn stuff from these regions you mentioned?
Good question. I think in 2010, what was missing was the mentorship layer was missing. So I brought Found Institute here because of that. So I flew in serial entrepreneurs from the West, to try to speak to teams here. Now I think that is quite level, right? So you can find good mentors in Asia. You don't have to go far. And then over the years, 10 years, capital has been a bit more mature, right? Angels are mature, seed funds, Series A, now Series B. But I still think that Series B, C, and after, and also the private equity coming down, that part is still new, right? They are still trying to figure it out. So that parts need some more time. It's not like that there is any issue. It's just it's still early days. Everybody needs to learn and grow with the ecosystem. Legal, terms, all those are mature, right? Using Singapore as an incorporated hub is mature. Using specialist venture lawyers, right, in Hong Kong, in China, in Singapore, those are already quite well established. They made a name for themselves since 2012. So the regulatory part is okay. The one that's still weak, I think, is still one is the talent pool is still not perfect, but it's getting better, right? A lot of it is just timing and making sure people don't leave the startup area and go and work for a bank or whatever. Right? They kind of stay within the startup side. They move from startup to startup and kind of mature from there. And hopefully we don't go through cycles, right, where people are afraid of working for startups. We haven't gone through that yet, right? So I think our talent is okay, but I think so far it's okay. I think where things are having issues are a little bit more frontier places, right? Pakistan, Bangladesh, they are having the same issues probably 5 years ago in Indonesia, for example. So far it's okay, but not, can always be better. It just takes time. Then for founders, the missing part is actually coaching. That's the thing that is missing. CEO coaching, startup CEO coaching. We don't have a pool of very strong CEO coaches in Asia. And we don't have that trend of doing it, right? In the US, it's very common. Right? After Series A, the VCs will assign two coaches to you. Right? It doesn't happen here. So we need that, especially now, right, in 2020. We need that. We need it. We need coaches to understand our situation, have empathy for our situation, and hopefully in the same time zone as us. I do know founders do engage coaches in the US, right, which is at least better than nothing, and they are very good at what they do, right? But having empathy for emerging countries, that's a different thing. So I think we should build that up. For I don't know how, but we will. I'm trying to make it happen, making sure that we have enough coaches for the CEO so that they don't run into trouble. And lastly is the IPO markets. So regional IPO stock exchanges are still not. They don't fully understand the tech sector very well. I think Hong Kong is okay. US markets are okay. Japan is okay. Thailand is opening. Jakarta already opened, but they are still new to it. Singapore is kind of open, close. So not sure what's going on. So I think the exchanges needs a bit more time to kind of get a hang of what we do, and hopefully, whatever has happening now in the US, may rub off over here, so that some of the companies in the region, have adequate pathways to exit.
Is that the reason why we don't see more IPOs in the region?
Yeah. It's partly the institutionals don't understand. Partly the investment bankers don't dare to do it because it's probably easier to do a property company than an e-commerce company. And it's also difficult to cover, meaning the research guys don't understand how to cover. The TMT research guys, the best of them are in India and Hong Kong, right? So imagine someone in Vietnam covering a tech company is a bit hard, especially the startup side. But if it's like a big cap, outsourcing company, yeah, they understand that. Right? But if it's, let's say, even a digital wallet company, it's very hard to cover it. So I think all the aspects of getting yourself public and all the stakeholders and the players, they still need time to understand what our business models look like, what are the comms look like, yeah. So it just needs a bit more time, a bit more resources, and then the founders also need to kind of take the first step, right? Sometimes they are like, oh, there is enough money in the private markets, I don't need to do this, or I need to be big enough to go to the US, so I don't need to do this. So I think in time to come, I think in the next 3 years, you will see regional IPOs. The founders will try it. Then the shareholders and investors will probably kind of champion for a few, and then somebody got to lead the way. So then everything will be, I guess, accelerated.
Going back to the founders, how do you see the quality of founders and entrepreneurial spirit developing over the last decade?
I think regionally it has improved. I think if you ask, like if you ask university students, I think probably like 20 to 30% of them potentially wants to be their own boss, right? Realistically, 7 to 8% actually do it. So it's becoming more and more common. Yeah, so it's becoming more common. So I think how, I guess, the region perceive entrepreneurship risk has changed. And even very conservative places like Japan and Korea, it has also changed quite drastically, actually. Yeah, everything points to the right area, right? So like even big companies do need to buck up and make sure that they retain good people.
We had Xiao Ning from Angel Central as one of the speakers here. Yeah. She was saying that she had even like scholars leaving their jobs in Singapore now and to start up a company. So it's a surprising thing to see that you have like a certain...
I think I remember back in my day, 2000, we had a situation that we had we have government scholars that started a startup in the Valley. They were all Stanford masters guys, and they took a leave from Army or something, I can't remember. Yeah, and they tried it out. I think all of them actually broke their bond and left, and all of them are in the US. They didn't come back. So I think it's a choice, right? It's an opportunity cost thing. It is a once in a lifetime thing. Sometimes chancing on an idea big enough that you are committed enough to do, that's quite rare. So if you chance upon it, then you may have to give up other things.
Let's move on to the business part. How has your investing perspective changed over the last years? And I suppose probably this year has even brought bigger changes. So what are you looking at the moment?
Oh, change. I think the main change in the last few years is more being a little bit clearer on what's going on. I don't know. Let me explain. So for the last so many years, I think what people don't understand is a few things. One is VCs look at companies like 12 years before. You know what I'm saying? Like I look at you and you're selling me your dream that is 12 years away.
Okay.
Right. And then by the 10th year, I will try to sell my shares, right? But you're selling me your 12-year vision, right?
Okay.
Whereas the private equity guys are looking at you and say, what are you last year? And what are you 3 years ago? And can I sell you in 3 years, right? So the way they look at things and the way we look at things is slightly different. So I've always wondered a few things. One is, I think I don't know, like 2-3 years ago, I was always saying this at conferences and when I was speaking and mentoring, is the early stage guys don't talk to the late stage guys, especially the investors. So angels don't talk to Series B people, right? So angels always talk to the seed funds people. Then seed funds don't talk to the A people, right? And then A don't talk to the growth people. Like we literally don't talk to each other. I think over the years that has changed, and it should continue to change, because if we don't know what everybody wants, then everybody will be making the same mistakes, right? So that's the thing that the last few years everybody should slowly try to figure out what everybody wants, right? What the growth guys wants, what the Series B guys wants, what the seed funds wants, and then try to judge based on that. I think it's as you know, our game is not as simple as everybody says it is. So yeah, so the main thing is we need to be more careful about the companies. We need to know where they will be going, so that the next round guys, will be attracted to what we have, and then similarly they are next round guys, right? So the best way to know this is you have to go all the way to the back, right? We'll talk to the Series D guys and ask them what they want, then you know what you should be doing at seed round, right? So it's the same as my analogy is which was recent. So it was same as how Kobe, if you know Kobe Bryant, he picks his spot to do his moves because he study how the referees do their job. So they know where the referees stand, then they know where the blind spots are. Then when he gets to the blind spot, he will commit a foul because he will never get caught. Okay, so the analogy is you need to know what people want, what people can see, and then you can do, right? So you can do your stuff, and then because you know how the game is played, then you know what you're supposed to be doing. So I think, and of course this year, yeah, everyone's a bit more conservative, and people are asking, should I focus on growth or profits? So I think conservatism have started since the WeWork issue, and obviously this year, right? So this year is kind of everything's uncertain, and cash is king and all that stuff. But there are people also raising a lot of money now, trying to take over, meaning trying to play the offense, right? And try to gain market share as fast as they can. So both strategies are correct. So it all depends on what they do, where they are, and the stage where they are.
But I mean, valuations are up this year, so
Sorry?
Valuations are up
this year. I think. Where, in Southeast Asia?
I mean, in general.
General is still up, right? In the US, it's up. Southeast Asia, it kind of didn't really change, right? I think February to May, it probably changed. And then July onwards, I think it went back. It went back. But if you look at some data, there's a bunch of down rounds too. So so that's quite common. I think in uncertainty, there's a lot of things going on. So.
Let's talk about possible exits. So you have been invested in Gojek. How do you see playing that out with the rivalry with Grab? There has been SoftBank apparently pushing for merger of the two, and at the other side, Alibaba investing more into Grab. How how is this gonna end? Is there gonna be a merger, IPO, or whatever?
I don't really know. So I mean, our background with Gojek was we were investors of Ruma, which eventually became GoPay. So Ruma was acquired by Gojek, so we are shareholders of Gojek. And we've also invested in their OTT spin out called GoPlay. So we are fairly aware what's happening. But if your question is Grab, Grab and Gojek, I think there is a few things, right? One is, at the shareholder level, whether combining both actually makes sense. Then on the other side, I think sometimes combining both, you end up with one player or one monopoly, then that's not very good for consumers. And then the other question is whether the DNA actually fits. Right? I think to me the Grab and Gojek DNA is quite different, so I'm not sure how that works. But at the end of the day, yeah, it's up. It's really up to the shareholders to figure out, if standing alone and competing makes sense, or combining and make that makes sense. So I think a lot of it, yeah, it comes down to performance and how well they're doing. And maybe there are certain things they can carve out. Maybe they don't combine, but maybe they carve out certain areas they don't compete in. So, but I think it remains to be seen. Yeah, it's if it's happening, it's probably been happening. But it remains to be seen. To me, that's not really an issue. I think there is enough money, and their eventual outcome is probably going to be a US IPO at some point, right? So it could be via a SPAC, it could be individually going out on their own, it could be combining and going out. I'm not sure. So yeah.
How about Carousell? You have been, or you still are an investor, I think.
Yeah, we are still investors.
Yeah, then worth 900 million now.
Yeah,
what's next for them?
For them?
Yeah.
Well, they have multiple acquisition offers over the years. So I think trade sale is there. I think IPO is there. I think they have enough cash for a while. There's a lot to do, a lot left to do, and also a lot more new things to do. So I think for them, I don't think it's in the imminent, not so soon. But again, we don't know until we know, right? So right now there's a few specs in the US that is targeting Southeast Asian companies. So I'm not sure what's going on. So you may not know. Yeah, I think we all don't know. But I think right now the focus is heads down and just executing.
Looking at your portfolio is quite well. It looks to me like you're well positioned for what's coming, especially in fintech. Where do you see the next big trends in this region? So e-commerce, has it still space to run, or are we looking at something
big
else?
Trends? Yeah. Let's see. I think pre-COVID even, healthcare, education, these two are the biggest ones. E-commerce, I would say the trend is towards the B2B side, right? I think B2B commerce, that's been trending probably a couple of years. Agriculture is the next one to be disrupted, but it takes a bit of time. It's just like healthcare. Healthcare takes a long time. Agriculture will take a long time. Areas that we still look at: media, entertainment. I think content for children is interesting. I think there's a few live streaming e-commerce companies coming out. Not sure whether it's correct or timing is correct, but yeah, there's a few of those. And yeah, B2B commerce, like I said, and also things to do with the blue collar, sort of the blue collar segment, right? So service and manufacturing sector. So it could be jobs, it could be training, it could be skills upgrading for those groups, especially now, right? So post COVID, either many are out of jobs and they need to be retrained, or once they're retrained, you need to kind of place them. So I think that is I think back to the fundamentals, right? So like agriculture is a fundamental sector in our region. Blue collar for whether it's services or manufacturing, those are areas to disrupt. But I think adoption takes a bit of time. But because of COVID, I think digital adoption is accelerating, so it's getting easier. But it cannot be that easy, but it's getting easier.
And are you happy with the size of your fund, or do you?
Yeah.
Are you looking for more scale? Probably. What's the right?
Yeah. So I'm not sure. This is something that we do internally. I think if it's a portfolio construction and outcome game, right? So if there are enough 10 billion companies here, then a bigger fund size should be fine. But if you don't have enough, that many unicorns, then a bigger fund size is not doable, right? Because what ends up happening is you will put, let's say, let's say, I don't know, probably reserve wise, let's say you put 25 to 30 million in one company and they end up being like $300 million. So yeah, so I think fund size to us so far 60 to 100. If you do seed Series A, seems to be a good place. Anything bigger is a bit tricky. Yeah.
Okay. Coming slightly towards the end, I want to circle back again what you talked before already on your work at the Founder Institute and bringing this Silicon Valley spirit to the founders here. Can you describe a bit for those viewers who don't know the Founder Institute, what it is and what you're doing there?
Oh, okay. Founder Institute is started by a serial entrepreneur called KrAsia. Started in the Valley, and it's basically a 4 months long night school for aspiring founders. So you can have a day job, you can you can be a ready entrepreneur, you can have a running company, right? And if you need mentorship, then this program will kind of help you out. So it has classes every week, company building exercises, and kind of like a boot camp in a way. It's pretty brutal. So 30% who apply get in through online aptitude tests. So there's a psychology test for you, and then about 30% get out. So we cut almost 80% of everybody that apply. So it's quite brutal. The point is it simulates how startup life is, right? So it's extremely crazy. Yeah. So that's what it is. And now we are in, I believe, over 100 cities. I think we just launched in Kazakhstan a few weeks ago, and Toronto, in Toronto. Yeah. So there's a bunch of chapters in Asia, Southeast Asia. So it's doing well. It graduates about 1,000 companies a year. Probably not sure whether it's the biggest in the world. My feeling it is. Great group of guys. Alumni is strong. The mentor alumni is incredible. The chapter directors are great, right? So it's great. It's great to be part of it.
What's the motivation for you behind supporting these super early startups?
I think there's a few things. One is when your ecosystem is new, founders will tend to make the same mistakes. And even when your ecosystem is okay, like Singapore, fresh entrepreneurs still make the same mistakes. So the reason is a few reasons. I'm not sure about being Asian or anything, but I think as a founder, you tend, like strong founders, they tend to only believe in themselves. They don't ask for advice that much. Right? They are usually stubborn, but they listen, right? But they are stubborn first, right? And then they selectively listen, right? So if they don't ask questions, then they are not listening, right? And then if they don't ask enough questions from the right people, then they completely have no information, right? That means they're gonna make the same mistakes. So FI is important because whether or not it's in the Bay Area, right? People still make mistakes. Right? For those of you who have been to the Bay Area for the first time, right? These are the two things you will feel when you get there for the first time. Number one, besides the weather, but number one, the tech sector loves to help each other. Right? They listen to you. They ask you what you do, and then they will say, "Oh, I have this friend that that is interested. I have this friend that can help you. I have this friend that have a similar company. Why don't you talk to him?" So on the second day, you get bombarded by that, right? And being from Asia, you're like, "What the hell is going on? Like, why is everybody trying to help me?" Right? So that's the first sort of culture shock. The second culture shock is after you stay for 2 weeks, you meet a lot of people pitching ideas, a lot of people with ideas, a lot of people who raise money. Then you realize, how come the ideas are still crap? I thought you are Silicon Valley. How come your ideas are still like really stupid? Right? So that's the thing. That even if you're Silicon Valley, there are still very, very bad ideas around. Right? So that means the rest of the world have no chance. Right? You will have bad ideas. So I think FI is good so that we can like recalibrate people. We can literally shake them, because FI is a boot camp, right? Because if you don't listen, you're out anyway, right? And then we'll let you fail. It doesn't matter. And then when you fail, you go back to your day job, right? But when we have the opportunity to shake you, because you are still there, you want to succeed, you want to listen, and then we start shaking you, then the more things going into your heads, right? So then the less mistakes you make. So in the past, when people say when is a good time to start FI chapter in Singapore, is when I go to pitches and most pitches are crap. Then I know I have to start FI already. So I think it's just a natural thing. It's not like when an ecosystem is mature, we can retreat and don't do anything anymore. I think you still need to be there, and it is still quite relevant to make sure that people don't make mistakes. I think we all know, or at least you guys know by now, that startups are very hard, right? Startups are very hard. Getting good people to join you is very hard. Getting investors to invest, also very hard. Finding capital for you, for 4 years to try and pivot 3 times, that's impossible in Asia, right? You pivot once, you're dead already, right? In the Bay Area, they let you make mistakes, right? And then you take a break and start another company, they will still fund you, right? Here, chances are you go back and work somewhere, and then after 1-2 years, you come back out and start something, right? So here the threshold is slightly different, right? So you need to hit it from day one, or else, right, you're back to the treasures again. So I think if we can help founders not make the same mistakes, that's what we are here to do.
Great. That has been very interesting. Brings me to the end of today's session.
Sure.
Thanks, Jeffrey, for all these insights and for taking the time to answer our questions.
Thank you for having me.
And I hope everyone found this today's session valuable. If you want to watch it again, we have a YouTube channel where you can see this episode and previous ones as well. VMTV is coming back next week already on the 22nd. We will have William Gozali, Chief Investment Officer of BRI Ventures, will be our guest. I hope I see everyone next week. And until then, bye-bye.